Support and resistance is one of the most important aspects of technical analysis, and most trading strategies use this concept of trading heavily. So we're going to get right into learning what is support and resistance and how to identify them. What are support and resistance? Support and resistance are key concepts that help traders understand, analyze, and act on chart patterns in the financial market. Support describes a price level where the downtrend pauses due to demand for an asset increasing. Support will always be beneath price like a floor. Resistance refers to a level where an uptrend reverses as a sell-off happens. Will always show on top of price like a ceiling. So how to identify support resistance? You'll know when a price has found support or resistance zone, when price enters consolidation from a strong move, or when price jumps away from a level after moving slowly to that price level. These are not the only two scenarios, but both are highly effective setups. The faster price reacts to the zone, the better. So there's three types of support resistance. You have horizontal, diagonal, and dynamic. The horizontal, like floors and ceilings, price zones, and Fibonacci line, this is by far the most simple in methods, and the one I use most often. All we are looking for are areas on the chart which have been tested many times. The more times, the more reliable, and ideally have been tested as both support and resistance. If they have been tested both as support and resistance, then the levels will be reliable areas to use as time goes on and might have historical significance. Diagonal support resistance, like trend lines, pitchforks, and price channels. Diagonal support resistance are just as effective as horizontal support resistance. Diagonal support resistance help traders identify areas within a trend structure that'll be good areas to take possible entries. Dynamic support resistance. These are like Bollinger Bands, moving averages, and Ichimoku clouds. Usually dynamic support resistance is some form of an indicator. Dynamic support resistance are very effective when it comes to reading the chart movements. These zones help measure volatility and price momentum in the markets. For example, when a Bollinger Band expands, it illustrates the markets moving in one direction at an increasing speed. So how to know the best times to use the different support resistance? To use each type of support resistance depends on what type of trader you are. Most trading strategies that consider support resistance in the analysis usually use some type of horizontal support resistance method. In the end, it comes down to what fits you. So as you see, support is always going to be on the floor. Resistance is always going to be on top. And the event price breaks the resistance, a lot of times it gets tested as the new floor or support level and goes on to create a new resistance. This chain of events, this stair step, is something that price and markets do repeatedly. You can even see down here in the diagonal support resistance examples. You see here you have the trend line, which highlights the different touches in the market. And you see price, if you were to draw a line straight through, you would see that that floor, that support that price had here, now gets tested as a resistance here and becomes a trend line test at the same time. That usually is a strong confirmation for a potential area to place a trade. So let's go to the charts and identify some support resistance levels and see this in the live market. All right, let's get into showing some support resistance and learning how to identify them. So a couple of things you want to know with support resistance that, of course, like in the PowerPoint, the support is floors, resistance is ceilings. But what are the strong and weak support resistance levels? That's more so what we're going to get into on the charts. We're going to learn how to identify them and then know which ones are the strong ones to use. So let's get right into it. So this is Euro Japanese yen on the 1 hour. And on this one, we're going to identify some support resistance levels. First, we're going to start with the horizontal support resistance. So with that, as I'm looking on the chart, the easy way to start to identify a horizontal support resistance, especially if you're brand new, is maybe candlesticks might be giving you too much information. So we could switch it to line charts. Line charts is going to only focus on the close of price and give you less information, but also kind of focus on what's most important when it comes to the support resistance levels. The second thing that you would want to do is kind of identify what parts of the chart or what areas, what price levels have the most bounces in that area. What jumps out to me right away is this area here as a support area in this instance. So you have 1, 2, 3, 4, 5. So you have 5 areas, common areas. They don't have to be perfect because this is a zone. This is not an exact price. It's a zone of price. So it could be a range of a small range of price that the market is reacting to. If I were to look again and look for another area, then this area would be a potential other one. You have 1, you have 2, this is in the area. You have 3, this move up here. You have 4, you have 5. So you have another 5 areas where a resistance could be. So now when you go back to the candlestick charts, it starts to make a little bit more sense. So let's start at the line chart so that way we can finish this up. So I'll do the red square for resistance. I'm going to extend right. So this area here would be known as your resistance area. And then here, extend right again, and then change this color to green. This area is going to be your support area. So now let's go back to the candlesticks. So now price doesn't look as random as before. It starts to have some structure in the markets. You start to be able to see a picture after you identify that area. One other thing you want to take to note when it comes to support resistance is how the price is reacting off of that area, how fast it's reacting. You want to look for areas that have faster reactions like this one here. So the fast reactions here, those are areas that I like to have. If we go back to the next retest of that area, that same area, there's another quick reaction. So you want to pay attention to those reactions of the area. You see here this resistance, you see this area here creates a quicker reaction. There was some consolidation in this area, but you see once it decided to move, that area supported that movement. My favorite area out of all these areas is this one. Reason this one is because there's very few candles in that area. As soon as it reaches the area, that reaction is a quick and decisive reaction down. And then you have here at the bottom, this reaction here gets tested. Price had broke this level, came down, and then came back up to retest this level as resistance. I love when price does that because now you had so many different tries. You think about price coming down. Remember, trading is like a tug of war. It's like a battle. And the bears and the bulls are the two opposing sides. So the bears are coming down, trying to break that level, or the bulls are pushing that level back up. And it's just this tug of war here. But you see that, there's more decisive movement going down than there is going up. Notice the quick and large candles going down. See here, see these candles, these candles, these candles, and now the candles that break at the run that breaks is these candles. So now let's zoom in. As price reaches that area and breaks it, it comes back to retest this area. It comes back to retest this area. When it retests the support. And I like that because you have so many different reasons for, taking that area. One, the bears have already established that area as an area that won't be support anymore. So when it breaks, you think about like floors and ceilings and multiple floors, like multi-story buildings. If you were to be on the second floor and for some reason you fell through the floor onto the first floor, what would become your ceiling after you fell to the first floor? What was the floor of the second floor? So as you're coming through, say this is floor 2 and this is floor 1. As you're falling through the floor, say you try to jump back up to the second floor. But for some reason, that ceiling that you had, that you fell through, that floor that you fell through is now, put back up, resealed. So when you jump back to price, jump back to the ceiling, and you bounce off of it again, you hit your head, you're going to fall back down. So that's the point of, retest. That's kind of the idea of it. Floors become ceilings and ceilings become floors. And when the retest is successful, then that transition of floor to ceiling and ceiling to floor is complete. All right, now let's look at some diagonal aspects of trading. Let's delete all this. Let's go to a different area of charts just to give you a different look. So we'll go here. Perfect example. So let's start with the trend lines. Trend lines are diagonal areas, are support resistance. The way you draw a trend line is from point to point. So all you really need are 2 points to start a trend line. So you see from here to here, that'll be your start to your trend line, and then you would extend it down. I like to draw my trend lines from the close of price. See these body from body to body. Some people like to draw their trend lines from wick to wick. Just depends on how you like to draw. You can also draw trend lines. On a downtrend, you're always looking for resistance to sell from. But even in downtrends, you want to identify the supporting trend lines. So we'll start here, because if we go this way, that trend line is broken. So we can't use that point. You want to find a clean area to draw a trend line. So I like this one. Let's redo this. So I like this trend line here. Reason being is we're able to go from body to body on a few different areas. Only thing I don't like about trend lines is that, it depends on how well you're able to draw them as far as your accuracy goes. So sometimes you can mess up when you're new. But remember, if you are drawing, draw from point to points. And like I said, I prefer drawing from the body to the body. So those are your 2 trend lines. It kind of forms a triangle. We'll get into that in a later video, how to trade those. But this is your area. This would be your resistance. We can change this color, change to red, your resistance, your ceilings. We can change this to green for support. So what you're looking for here on a downtrend, see how this is a downtrend? You're looking for resistance areas to find and to trade from. Of course, this one wouldn't be your trade because the first 2 are just there to identify your trend line, the foundation of it. But let's say that price, moved up and touched here. That might have been an entry for a sell. Let's say price moved up and touched here. That might have been an entry for a sell. So that's what you're looking for in those areas. The second way you look for in trend lines is just like what I described in the horizontal trend lines. I mean, with horizontal support resistance. When price breaks a level or a resistance level or a support level, comes back to retest price. So this now, we can change this, it changes to red. After it retests this level and bounces off of it, this level is now a resistance level. And then you see that price continued its way down after testing that trend line a few times. It happens over and over again. So if we go back, sometimes both horizontal and diagonal resistance can be used together. So let me show you that example. So we go here. This was a support line. The price had closed beneath it. You see how these, I'm drawing it kind of where price closes in that area and using some of the wicks. This is the common area. So when price closes beneath it, you see here, price had retested. So it came down. Remember the story of our candlesticks. Came down, broke that level, and then retested that level as resistance. Once that level was retested as resistance, price came down to continue that downtrend. Let me show you another form of horizontal resistance that helps you out pretty well. So we're going to start from this level here. Let's go. We're going to use Fibonacci. And it's going to have a whole video dedicated on Fibonacci. Our price ratios, think of it like discounts in the market. If you have a 50% Fibonacci, think of it like if you went to the store and something you wanted was 50% off or 61% off. Now, as the discounts get bigger, the interest grows. So in this area, you see that the way you draw Fibonacci, let's back up a little bit. In this chart, this area here is the top of price. And then this area here is the bottom of price. In a downtrend, you want to draw your Fibonacci from top to the bottom. And as you can see at these points, price likes to line up at these points multiple times. And even with the later levels, which we'll go into later, price usually lines up at these levels and bounces off of them, just like if you would have drew support resistance lines. So Fibonacci is something to look out for. Here, let me give you all the Fibonacci levels. So let's go to here. And then we're going to take this away. That's a custom one that I like to use. And then there is one more, it's like the 23.6, but I don't really use that. So like 0.236. I don't really use that Fibonacci level too much. Let's just stick there. So as you can see, when I added that 38.2, which is another Fibonacci level that you'll see on your MetaTrader or TradingView, how price just perfectly bounces off of that level before continuing down. You'll find those areas happening a lot with Fibonacci and using it as support resistance. Now let's look at some dynamic support resistance. Now these are usually in the form of indicators. So we're going to start with your moving average. So your moving average, a good one to use for support resistance is the 50 moving average. So this moving average here, what you like to know about dynamic one is that dynamic moving average is not necessarily just for support resistance. Dynamic support resistance, not just for support resistance. They usually tell some other aspect of charting, whether it's momentum or range or velocity and or trend. So in the case of moving averages, they help you tell trend. So when price is below a certain moving average, then it's within a downtrend. If price is consistently above a moving average, it's an uptrend. So as you see here, price is consistently below moving average. You're going to have spikes because everything's not going to be perfect. But the general aspect of it is price is staying beneath this moving average, forming a downtrend. Some common moving averages are the 50, or the 62. But these are different moving averages people like to use, or the 200. 200 is a pretty strong one because it's not as sensitive, and it usually gives good support resistance levels as well as tail trend. Like I said, beneath the moving average, downtrend; above the moving average, uptrend. Another form of dynamic support resistance is your Bollinger Bands. Bollinger Bands are basically different types of moving averages. So you have a moving averages in the middle. You have something called a standard deviation. Now, you don't have to ace a statistics class to really, don't panic when I say standard deviation. These bands, these upper and lower bands, just represent a range of prices. All you have to remember with this. And when price reaches the top half of the band, then it's usually this top half of a band is usually a form of resistance. The bottom half of the band is usually a form of support. The band expands and contracts because, like I said, dynamic support resistance usually shows another aspect of trading outside of support and resistance. So the Bollinger Bands, they help you identify volatility. So when the bands are spread apart, volatility is just how fast the market is moving. If bands are spread apart like this, then that tells you that the market is more volatile. When the bands are contracted like this, that tells you that the markets are more stagnant or slow. So this is what the Bollinger Bands do. Now, as you can see, there's also areas where, maybe a Bollinger Band may also touch a support resistance. If I was to identify and use all forms of support resistance in this picture, it would look something like this. And for right now, the green candles are just going to be, for support or resistance. Because in different parts of this chart, like for example here, in this situation is support, but here, this situation is resistance. So we're just going to keep it one color for now. So if I was to use multiple levels, price would look something like this. There we go. So as we can see now, there are areas in the market where multiple support resistance lines, congregate or intersect. One area would be here. Now, this movement here is both on the top of a Bollinger Band as resistance and testing a horizontal support resistance as resistance. In trading, you want to have what's known as confluence, meaning multiple factors determining the same event or reasoning. Think of like a case, you want multiple pieces of evidence to convict on a case. That's what you're doing with trading. In this example here, you have a trend line and the top of a Bollinger Band. So those are good levels. Here you have a resistance and the top of a Bollinger Band. So when you start to see things match up in the direction of the trend, as far as support resistance, those are areas to watch out for potential entries. So I hope that this helps out as far as identifying support resistance. Take the time out to familiarize yourself with the three levels or three types of support resistance and draw out some price levels. Try to identify support resistance on your own, because this is going to take some time and practice. So hope that this video was valuable to you, and I'll see you at the next video.